What is going on, everybody? My name is Usain Marquez, and thanks for tuning in to my channel where I try to provide you guys with some good information regarding invoice factoring. I started this channel because I've been in the industry over 20 years now, and I've seen firsthand how this product has benefited businesses time and time again. So if through the making of some of these videos, I can help that business owner make an informed decision as to whether or not this is the right product for them, that's all a guy can ask for. Lastly, if you guys don't mind liking the video, and please consider subscribing to the channel, as I'm really trying to expand this channel to kind of be a one-size-fits-all for all factoring information and education. So let's hop right into the video. Today it's going to be a little bit shorter than yesterday's video because I'm talking to my business banking colleagues, and I might have about 5 minutes of their undivided attention while they're drinking that coffee before hopping on the phone to service their accounts. But in all seriousness, I do want to talk about something where you guys might be missing out on an opportunity to really provide a good service at a pivotal part in your client's growth stage, right? Like all businesses, injection of cash flow is of the utmost importance. And sometimes when that cash flow doesn't come in on a consistent basis, it can put a strain on your client, right? Now, that's not necessarily a bad thing, right? Companies grow organically, right? You do the work, you get paid. You do the work, you get paid. However, as that business is growing, those jobs might be bigger now, but they might come with having to offer terms or being told, hey, if you want this job, you're going to have to give us terms. By terms, I mean net 30, net 45 day, right? So you've got this business who's been paying for all the material, paying for all the overhead, doing the work and being paid for it, to now having a business owner that's having to pay for material, having to pay for overhead, doing the work, but not seeing that payment for 30, 45 days. That's where the cash strain can come in. That's where they're going to come see you, right? They're going to come see their banker. They might not know what factoring is just yet, or maybe they heard about factoring but don't really get it, and they might be coming to ask you for it. But before they do that, they walk in through your doors and they're asking for a loan. They're asking for a line of credit. You do everything in your power to service them, but unfortunately, the reality is that not all businesses are going to qualify for traditional bank financing. This is where having a relationship with a factoring company is of the utmost important for that bank and for that business banker. Factoring is a great instrument to use when a business doesn't qualify yet for business financing, but they've got good receivables which a factoring company can fund on. So when you're a business banker, what's your underwriting guideline, right? You're really looking at the business. You're really looking at the balance sheet, the financials, the credit worthiness of the business, right? Factoring doesn't put as much emphasis on that as much as they do the client's customer's ability to pay, right? So if they've got receivables and they're selling to a credit worthy customer, they are a candidate for invoice factoring, because what a factor is really looking for is the credit worthiness and the ability that the customer, the end user, can ultimately make that payment. And it's a great instrument to really be kind of like an incubator to go from not being able to qualify for bank financing to qualifying for bank financing. So let's take a look at a couple things here, right? And the importance of a banking factoring partnership. Maybe your bank doesn't have a factoring division. That's fine. Build that factoring partnership with a factoring company, right? So again, to some of my business banking colleagues that might not know what factoring is nothing more than a form of finance in which a company sells its invoice to a factor at a discount for immediate funds and receives the remaining portion when the debtor pays, right? So essentially, you've got a client that's walked in through your door. They don't qualify for bank financing, yet he handed you an invoice aging report. Light goes off in your head. All right, this guy doesn't qualify for a line of credit, doesn't qualify for a loan, but he's got this aging report here. It's strong, right? It's $20,000 a month, $40,000 a month, $100,000 a month, right? Let me contact my factoring guy, have him look at this aging and see if factoring might be an alternative for the time being, right? So what are we looking for? What should you be looking for today? Who's coming through your doors that could be a candidate for factoring that right now doesn't meet traditional bank financing underwriting guidelines, right? So you're looking for a business that is doing business to business transactions, right? Has invoices and is dealing with having to wait 30, 45, 60 days. So look for things like, hey, I've got this aging report. I've got good invoices out there, but I haven't been paid. I need a loan. I need a line of credit. An invoice aging should be the first signal that, hey, if this guy doesn't meet banking, doesn't qualify for a bank line or a bank loan, factoring might be an alternative, right? So we've got a business that does business to business transactions and has invoices. Businesses that are dealing with net 30, net 45, net 60-day pay, just waiting to get paid on these receivables. Another thing, we have to file UCC, right? So we have to be in first position of those receivables. Much like when you guys file UCCs, we've got to file UCCs, right? So does your client have invoices? Does your client do business to business transactions? Does your client have those receivables cleared of any potential UCC filings? A staffing company, a transportation company, a distributor. These are the type of businesses that are prime candidates for factoring. All right, so let's go to the next page real quick here. This benefits both the bank and the client, right? So where does the client benefit here? Where are you able to go ahead and provide immediate benefit to your client? They didn't meet the qualifications for a loan. They didn't meet the qualifications for a line of credit, but you offered them factoring. You got them with a guy like me. You got them with a good factoring company. The immediate working capital need has been met. You've injected the cash flow into their business, which is the reason why they walked into your door to see you, right? You've added back office support, right? Factoring provides credit management. There's no sense in giving somebody terms if they're not credit worthy. One of the key things that a factor does is we pull credit on your client's customers to make sure that they're strong enough in order to go ahead and factor those receivables, to make the business owner comfortable in knowing, hey, you are providing work or services to a credit-worthy customer where you should be able to sleep at night extending 30, 45, 60-day terms, right? It's no debt. We talked about this. One of the best parts of factoring being used as an instrument to get your clients to bank financing is the fact that factoring is not a loan. We are purchasing the receivable. It's not a debt. It doesn't show up in their balance sheet as a debt that is owed, right? It's a great instrument to graduating that client to bank financing, right? More importantly, owners are able to focus on sales and marketing growth. When you say no to your business client and they're going back and they're frustrated, they're going to spend more time running to that mailbox looking for those checks to be in there than sitting down, focusing on how to continue growing that business. That's what we want our business owners to do. We want our business owners to be growing. We want his staff to be working hard. And we, as the banker or as the factor, we want to help them with the cash flow and put them at peace of mind. They don't have to worry about that, right? So that's how the client benefits. Look at all the things the client immediately gets by simply referring them to factoring. How does the bank benefit, right? We're not a bank. We're a factoring company. Your depository accounts stay there. All the wires are sent to your bank. So that's cash that's being injected directly into your bank. You might have gotten a client so frustrated by not being able to assist them, they decide to take their banking account and go elsewhere. Not anymore. You were able to think creatively. You had an alternative plan. You've introduced them to factoring. Depository accounts remain there, right? But more importantly, guys, you're building the genesis of a great relationship by being able to offer them factoring. And in a year, 2 years, maybe even 6 months, now they qualify for bank financing. And that's the best referral a factoring company can get. The best type of referral and reference a factor can get is that client that picks up the phone and says, hey, Hussein, I walked into that bank a year ago. I wasn't able to qualify for a loan. I wasn't able to qualify for a line of credit. But man, by using factoring, by it not being a debt product, by not having that lack of cash flow injection into my company, we were really able to scale this to where I was able to go back into the bank a year later, and now I'm able to get a traditional bank line or a loan. And this has been a great tool that's helped me and my company get there. So want you guys to really be on the lookout today for businesses that are coming in that they might not be meeting your underwriting checklist for bank loans and lines of credit, but they've got receivables. Go through your rejection list. Go through some of your denial lists right now where you've had to not be able to give a line or a loan of credit, and call those guys back up. See if they've got receivables. Reach out to factors, right? See if you can build that relationship so you can assist these companies that are not meeting bank guidelines right now for traditional bank financing, but have good receivables and can play a pivotal part in the growing scale of your client. Guys, that's the video for today. I hope you guys enjoyed. If you have any questions, please feel free to leave a comment at the bottom of the video. I look forward to making the next video for you guys. Talk to you guys soon.